Hello and welcome to our podcast Tech Connect. I am Kesha, Senior Marketing Manager at Signet.
So good morning, sir. And today we have the topic of real-time reporting and e-invoicing. So the first question definitely is, many countries are moving towards real-time reporting. And what's your take on that? How fast should businesses be adapting this change?
I would honestly say that don't have a knee-jerk reaction. When we know the countries across the globe have clearly stated that they are going to go for real-time reporting or invoice in next 2 years, next 1 year, next 3 years. The large corporates and small businesses have a lot of work at the background to be done to be prepared for it.
Right.
And this is the biggest mistake. Like in India, what we saw, it was a complete chaos. Means in the lockdown, we did the e-Invoicing, and it was one of the toughest things to achieve into it. So being very honest about it, when you know that the global indirect tax practice is moving to this direction, be prepared for it. And the most important factor over here is, for a global organization, they have a global system. They need to modify it for a local tax requirements, and they need a hyper-local system which is going to take care of the integration with the government system. Now start thinking onto this line, start preparing for it, and whatever background processes that needs to be done into your ERPs or into your accounting packages needs to be started from it. People have taken an approach that all we need to do is kind of comply for it, generate the invoice, register it into the government portal, and that's it. That's not it.
Yes.
Because you will have to reconcile that data with your compliance data for your GST or VAT returns or whatever it may be you're filing onto the government portal. And all those aspects needs to be taken care of it. So the knee-jerk reaction or the easy way out is the biggest problematic here. We know it's going to happen. Be prepared for it. You don't need to invest big into it for the preparation, but having that thought process, having those fields in place, doing that master cleansing, all of those activities which are required into it can be done in advance. So that is something which needs to be done. I was in a conference in UK some time back, and I was talking about tech stack architecture.
Right.
And I felt the people over here is not ready for the conversations that we are having. And that is something very strange, because in 2 years time period or 3 years time period, the entire European region is going for a much more data driven tax regime than what it is today. And that preparedness or that initiation has to happen from side. So it's going to be a knee-jerk reaction. It's going to be impromptu. It's going to be sudden for them. But that's how it is. So given the simplest possible advice, start preparing from now, because that's much more important. What I am saying is that over the next 10 years, most of the countries, the large economies in the world will go invoicing way. And digital transfer of invoicing is going to happen. So it happens for the regulatory purpose. It happens for the cross-border purpose, like people and other areas onto it. But it is going to happen. So as an organization, if I prepare for it, and if I start giving invoices into a digital format and start following the global frameworks, it's going to be much easier for me to kind of take care of the compliance requirement. But I'm also improving my green footprint, and I'm also doing a business digitally, which is absolutely going to help. So looking to this, start preparing from now. That's the only answer I can say.
Okay. So the next question is, what is the cost of non-compliance? Most of the businesses right now also have practices which are very normal in day-to-day lives of creating backdated invoicing. This is just one instance. There can be multiple such instances which have become their new normal, business's new normal. So how do you eventually ensure that your compliance is at point?
I would give you 2 examples. I would give you one example of India. I would give you one example of Saudi Arabia, and kind of another global viewpoint into it. Cost of compliance for each country is going to be different. It's not going to be uniform across geographies, or it's not going to be uniform into it. But if I take India, if you're not compliant, you've not generated the invoice, it is not a legal valid document. As simple as that. The other person cannot take input tax credit onto it. Your kind of overall financial reporting is going to go for a toss.
Right.
And you know that we have worked with some companies to actually help them legalize their documents even 1 year after the invoices have been originally generated. So we had to help and support organizations in this fashion. But the simplest thing I can say that when you have generated the invoice in India, it gets automatically populated into the GST returns. Now, if you kind of rewrite onto it, or if it does not get automatically populated, you file your GSTR1 and the e-invoice gets generated subsequently, or you are overwriting your e-invoices with fresher GSTR1 data. It is a kind of a create alert into the tax authorities' systems by which they will send notices to you.
Right.
So you are only inviting more notices, more replies to it, and the compliance burden or the compliance cost is going to go up multifold. This is as simple as that. Similarly, Saudi Arabia has much more stringent laws, and the non-compliance pressures or the non-compliance challenges over there are going to be much more. Even in European countries, the way the law gets structured, the way it comes in, it will kind of give more clarity in how this happens. But non-compliance is always going to be far more expensive for the business. Now, when I go to the business, I think majority of their invoices get compliant, but there are manual invoices, there are certain things which are done out of the ERP systems, and they struggle in terms of getting compliant onto it. And it's always as an afterthought that it comes in. That again comes down to the data governance, the financial discipline, and all that stuff. And if you try and put that into place and kind of identify the areas that are non-compliant, try to put in practices by which you can get compliant, then it will become much, much easier. So that's the approach which should be taken by the companies. And I would say there's no fun in being non-compliant unless and until you want to kind of be into a different zone altogether. But it's important that you be compliant.
Yeah, and as you always say, it is better to be proactive than reactive.
Yeah.
So the next question is, how technology solutions can identify non-compliances?
So there are multiple different methodologies of technology solutions helping you non-compliance. One, analysis of the data that is coming to you. Integrating it with the government portals to actually identify where the failure points are. Whatever data is available into the public domain, consuming it and correlating it with the data that is in-house, that will kind of give you a very good idea about the non-compliances overall. Then studying the patterns of the behaviors and patterns of the transactions that are being done by your buyers or sellers. And that is something which would also kind of give you ideas about the non-compliance. The pulls and the pressures of the vendors that comes into play, that also will give you an idea about the non-compliance. So these are multiple different things. There is not a single method which will kind of fit all the areas, but you need to deploy into a best fit scenario and use technology in a much bigger way to actually identify what the areas of non-compliance are and then move towards it. So data governance, again and again, I repeat the question is data governance. First, have data governance in place. Use analytics to kind of understand what the data is trying to say to you. And the third and the most important is you have so much data available at a granular level, at a SKU level, at a HSN level. Start analyzing and using it for the business benefit. It can actually take care of all your cost and help the business in a much better way.
Right. So when we say implementation of technology is a must, how would a company or a CFO ensure that they are de-risking a single point of failure? So what's the backup plan there?
I would say there are multiple different approaches to it. And kind of even the government of India, and if I take Indian context, has realized that relying on a single point of source or single technology solution does not make sense. Each of the providers have their primary and their DR. So that is the first de-risking that is happening over there. Second thing, from the government side, multiple IRPs are coming into play. So that is the second de-risking which is happening. If you take our own solutions, it has a de-risking mechanism into it. If our systems are failing, we have a kind of a different kind of area by which we can kind of do that. And over the last 5 years, we have not seen our systems being down for over more than 5 years in last 5 years time period. So that is a kind of inherent de-risking that as a supplier we have built into our system for it. But for a corporate, there is one particular way, and that is that if they do not kind of automated systems fail, there is always a manual approach to take care of the compliance part. So there is a secondary approach which is available. You can either go directly to the GSTN portal or the IRP portals and comply onto it. So that de-risking is in play. But having done that, having said that, it is very important that whatever manual approach you have taken at any given point of time is also brought back into the core systems, because you need to have a single source of truth in terms of your compliances. Right. So that reconciling of the data, if at all a manual approach has been done, needs to be taken care of it. Otherwise, you are again creating another problem from your end. So that's how you should de-risk into the whole process.
So this is the last question for today, and it is totally unrelated, but the entire world is moving towards digital payments. So companies would think through that, say suppose if there's a dynamic QR that you're going to print on a particular e-invoice, how will essentially that move to the last mile to actually make the digital payments?
So first and foremost, this is not an unrelated question. This is very much related to what we have been discussing today. So if you ask me, there is no kind of a clear mandate from the government side. But if I take the South Korean example, if I take how Egypt is going for e-invoicing mechanism, if I take those kind of areas, if I take another few countries who are quite advanced in terms of the invoicing, the B2C is going to be a part of e-invoicing potential. So take for example, a hypothetical example, that all invoices that we are generating has to be generated or recorded. I would not say generated, but recorded on the government portal. Now, if you go to a mall, you kind of buy some particular products, the invoice is kind of recorded onto the government portal simultaneously. You get a digital QR code payment. You kind of scan it. The bank information is already available. Through a UPI, you make a payment through it. And honestly speaking, you may stop going to the malls, because with ONDC coming in, with the digital walls coming in, you will be able to do a digital shopping of what you want to do sitting at wherever you want, and that will be delivered to you. Right. But all this ecosystem, and look at the ecosystem of the entire ecosystem together. So take GSTN was the first part of it, e-invoicing was the second. Then in parallel, take the UPI payment mechanism, take the retail being taken digital with the ONDC framework. Now in all this thing, if you want to buy now and pay later, and if you want a kind of an instant loan with it, consider the account aggregator mechanism by which you can apply for a loan instantly and somebody will kind of give you the loan for it. This entire digital footprint will on one side ease the way the business is being done, ease the shopping experience for you as a shopper, but it will also help government improve the revenue multifold. Definitely. And that is going to bring in more investment for the country, because that investment will kind of come in terms of improving the infra and other areas. So helping this digital process in a nutshell is going to make a big difference. And it's just not about the QR code. It's that kind of detail within the QR code which is going to make life very, very simple. And I was very kind of an interesting story, and this is I just want to kind of share at the lighter moment, that recently I had gone to Haridwar for a holiday, and we went for whitewater rafting in Ganga. When we came out of it, I was not having my wallet, and between about 8 of us, we just had a single mobile phone. And when we came out, we wanted to have fresh lemon juice, we wanted to have some snacks, and just on a Ganga bank in a remote place, how would you actually pay for it? That was a question, because we were not carrying any currency into it. And all the hawkers over there, had a QR code by which we were able to make a payment to
Yeah.
them, and we had the food. So that's the story about it. I was very, very happy because that is where you see how UPI has penetrated to the last mile, how the QR codes are benefiting the smallest of the small hawkers in terms of his business, and how as a kind of a user of that technology it is benefiting in the process. So that's where India is moving. The entire world is looking towards the type of technology we are deploying today. And instead of being a follower in terms of technology, today we are a leader in terms of that. So that's the great change we are seeing over here.
Yes, definitely. The government has thought through the digitization.
Yes.
So thank you for your views on e-invoicing, and we'll soon be back with another
Absolutely.
topic for another episode.
Thank you so much. Thanks, Kesha.
Thank you.